Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 19th day of August, 2019, and this is the Daily Report for Gold and Silver. Strong selling pressure in both gold and silver, mild upside moves in the dollar, and a stock market that was absolutely resilient with the Dow Jones Industrial Average closing up about 250 points. Statements made by President Trump over the weekend, along with his administration, alluding to the strength of the economy and also putting pressure on a much more aggressive rate cut by the Fed, along with a change in the monetary stimulus from China, really created a global wave that started overseas in Asia and then moved all the way across the pond here to the United States, with all equities moving higher. The question is, will this be a short-lived move or an actual reversal or the change of things to come? My sense is a short-term move, because if in fact we see more stimulus coming in, that would also have a bullish effect on safe haven assets such as gold rather than a bearish effect. So we'll have to see how this pans out. However, we did see gold and silver trade sharply lower. Let's take a look at current pricing. Traders, as you can see, gold is down sharply, down currently $17.90, 1505.70. Low today, 1503.30. That's important due to our stop and our long position. And the high, or the open, was sitting at 1523.60 with an open of 1523. Silver also sold off pretty dramatically, losing 1.6% on the day, breaking back below $17 at $16.84.5. That's a net decline of 28 cents. Platinum and palladium actually gained on the day, with platinum futures at $854.40, up $2.90, and palladium scoring a $31 advance at $14.72.30. Let's take a look at our charts and assess the damage that was done today. There is absolutely no doubt that today's decline in gold prices was sharp. It was severe, but in terms of causing any major chart damage, I am going to withhold my thoughts from that until the end of the show. My sense right now is, as long as it remains above $1,500 per ounce, basis this most active December contract, we could see a recoup in the market and a move back up. However, there are technical signs indicating the real potential for continued lower pricing. In fact, this morning I had written out a trade alert. I've just brought that up on the screen. I did not send it out because my sense was the reason I initially put a stop at 1496.13 is because I wanted to protect us against any short-term move challenging 1500 but not breaking below it. I thought about it and then decided not to send that out. But as an alternative strategy, if you want, you can look to limit the loss by raising your stop to 1502.13. On record, we will remain long with our stop intact at 1496.13. Now, in terms of what we're seeing on a technical basis, on Friday on our daily charts, we had a simple two-day pattern known as an engulfing bearish. That is this pattern right here. Today, we certainly got a candle that would absolutely be a confirming candle, and that is this lower price here. However, the fact that it remained above 1500 gives us some hope, because my sense is that what the market is reacting to is additional economic stimulus by central banks, and that propping up U.S. equities. Well, economic stimulus is another word for printing money, and if they're going to print money, if we look back into 2008, 2009, when the market ran and quantitative easing began, we had a scenario in which we had a rising U.S. equities markets and rising gold prices. So we could certainly see a return to that. However, as of right now, there's no doubt we are in a precarious position in terms of current pricing, and we'll need to watch this very, very close to see where the market could go. Now, if in fact it does continue to track lower and it does break, where could we see this market go to? And to that end, I have created a basic Fibonacci retracement beginning at the beginning of this, what we're labeling as a third wave, which comes in roughly at $1,269, up until this top that was hit really last week at 1,546. It puts a 0.23% retracement in at 1482 and a deeper 0.38% retracement at 1441. So a hard break below this would signal further declines as low as 1441, this all on a technical basis. The one thing that I have to say, though, is this market has not really been moving on technicals, but rather on fundamental events going into the market, and that could certainly remain. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.